Home improvement loans can be overwhelming. If you're considering a major upgrade to your home, I'll talk you through how you can finance it. There are two main types of loans, unsecured and secured. Unsecured loans are pretty straightforward. They're similar to personal loans and they're ideal for smaller projects. They're less risky because if you can't make the payments, your home isn't on the line. Now, secured loans are a different story. They're designed for larger projects, typically over 25 grand. But here's the catch. They're secured against your property. This means that if you can't pay it back, you could lose your home. Also, the interest rates on these loans can vary, making budgeting a little bit tricky. Normally, the interest is lower because a lender has collateral if you can't afford to pay. So how do you pick the right one? Well, a personal loan is generally safer and cheaper than a secured loan, but if you need a larger amount and you're leaning towards a secured loan, make sure that you read up on them first. Sometimes remortgaging might be a more cost-effective option than taking out a secured loan. Before jumping into a home improvement loan, consider other alternatives. Always compare your options. It's all about finding the right loan for you, whether it's secured or unsecured. When you apply for the loan, you'll need some ID and proof of income. The lender will review your application along with your credit history. Decisions can be quick, sometimes within 5 days, or even instantly in some cases. Once you've been approved, you'll usually get the loan in a few days, sometimes even in the same day. Then you're ready to invest this money in your home improvements. You pay the loan back in monthly instalments, typically by direct debit. Some lenders allow early repayments or deferred payments, but watch out for extra charges. Before you make your mind up, let's weigh up the pros and cons. The advantages are the flexibility you have with spending the money. You have the potential to increase your home's value. If you're approved, you've got quick access to funds. You can access a decent lump sum, which is good for budgeting for larger projects. Now, here are the disadvantages. You pay more than you borrow due to interest. To get the best rates, you need a good credit history. Secured loans means that your home is at risk if you can't afford the repayments. You'll get penalties for missed payments, and home improvements might not always increase property value. There are some other factors to take into consideration. Work out how much the interest rate will cost you over time. For smaller projects, a 0% credit card might be better. Make sure you can afford the monthly payments and loan duration. Think about how you would fund it if you got sick or lost your job. If you're still trying to fathom whether it's right for you, it all boils down to your financial situation, the scale of your project, and your comfort with the associated risks. Before committing to a home improvement loan, it's important to find out how much you can get and how much it'll cost you without hurting your credit score. I've partnered with a company who can provide a free quote so that you can start to understand what's available to you. Fill out the form for a free quote and I'll leave it below this video for you. And if you use this link, you'll be supporting Thrifty Family. So thanks.